It's Martin Shkreli, week 19, episode 19 of This Week in Investing and Finance. Thanks for participating and making this a fun and successful series. Without any further ado, let's think about the week. Last week, probably the most interesting thing was the VIX returning to 11. So we had this sort of risk flare-up coinciding with certain political events and geopolitical events and various other kind of risk shocks. And the market sort of realized that risk flare, sometimes we call that risk flare, the risk flare is not consequential. Bonds basically didn't do anything. Stocks recovered a little bit. Bitcoin is still the star of the show. There are some interesting comparisons to the tulips of the Danish tulip craze. If you're not familiar with that, I'd strongly recommend Tulip Mania, period where tulip bulbs went to extraordinarily high prices. I don't think that Bitcoin is like tulips, but in fact, I think it's the opposite. But it's just something, I saw some interesting literature on that. Dutch, Danish, Denmark. What's the difference? I don't even know. Anyway, Bitcoin's at 50% this month, so pretty strong rally there. Who knows if it will continue or not. Actually, currencies were sort of interesting. The euro looks like the euro keeps strengthening. You know, this has been a lot of currency traders like to trend follow, and this is about as good of a trend follow as you can get. It tends to work in currencies as you double down on kind of the minor corrections, hoping that they don't become major corrections. And you can see that strategy. Sometimes it becomes a self-fulfilling prophecy, but it's been an interesting trend for sure in the last probably the whole year. Basically, the euro's strengthened quite a bit. We had another good week. While the markets have also had a good week, but have had a bad month. So we're up 11% for the year, which is I think pretty phenomenal, given we've only been investing for 19 weeks, and I think 30, probably 33 or 34 weeks have passed. So really good result. And also we haven't been fully invested or have had market exposure. So really phenomenal year so far for this portfolio we're running. You guys should see that. Anyway, I thought I'd mention inflation's sort of interesting. You know, that's kind of one of the most important things to think about. I wouldn't focus on too much else on the macro side, but inflation is super important. And so right now the 10-year is yielding 2.17%, and the Treasury inflation protected securities are yielding, that's this guy here, is yielding 0.4%. So the normal 10-year is 2.17%, but if you hedged inflation, which is what banks do, you'd only be yielding 0.4%. So in essence, this is the default risk of the United States government, if you can think about it that way. And that's the price you're getting. That's the price you pay for the chance of a default, in essence, which is a pretty modest price. Now, the PCE is a form of inflation. It's an inflation gauge, and that's reading around 1.4, 1.5% right now. 10-year minus the tips is telling you 1.7%. So, sorry about the mic thing. I had to move the mic because of these babysitting a cat from my coworker. In any event, I think that these inflation forecasts are probably too aggressive, and I think that we're going to see lower inflation than that. You can make a lot of money trading inflation. It's not easy to do, but it's just something that is an interesting thing to trade. Anyway, earnings season is basically over for healthcare, but for tech, software companies often have weird month-end or fiscal years. So Veeva had a bad quarter. This is a software as a service company that does CRM software just for pharmaceutical companies. And it's like one of those things where they had a good quarter, but expectations are so damn high that the street thought it was a bad quarter. Splunk is a IT infrastructure, a software company that had a good quarter. Wooba is actually a Chinese company called 58.com. And like a lot of Chinese e-commerce companies, Wooba's, or 58 is kicking butt. Not many people know this stock, but it's these are the hidden gems of the stock market. Anyway, the months to date, this has been, for a summer month, this has actually been one of the more interesting months of the year in the market. You've had the generic scare with Teva, Natco, Mylan, Lannett, Endo, Mallinckrodt, and Valiant all getting pummeled. Aceto too, I guess. I colored all the generic ones yellow. And you could say like spec pharma / generic, basically, right? So you've had these spec pharma generic companies just completely walloped. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, with more than 15% or so declines. So the generic industry is in Armageddon mode, with companies like Teva possibly going bankrupt, which is really a defining moment in the history of pharmaceuticals. Mylan, Teva. There seems to be some overcapacity, and if you look up one of the lessons in business, I think that's really important, whether it's pharmaceuticals. I know pharmaceuticals, obviously, but if you look around other businesses, I had the pleasure of meeting Sam Zell a few weeks ago, and Sam bought rail cars when nobody wanted rail cars. And then Wilbur Ross is another good example of a billionaire investor who buys out of favor things. I think he bought a lot of steel companies when steel was out of favor. So obviously you got your classic, clinical trial failures and things like that. I was long Protalix. I bought this a long time ago. I haven't looked at it too closely. I have a tiny position, but it was down, so I suffered a little bit from that. But it's a really small position. And then we'll talk about Rare. Ultragenyx had a bad clinical trial outcome. This company has had a lot of issues. They found wood in one of their medicines, and then another one of their medicines killed somebody, so they got serious issues, to say the least. I was short Axim. That's a secret short. It was down 19% this month, which is nice. Short Ironwood and short Nectar. So on shorts, at least, we got 3 pretty good movers here. And one wrong, I guess. Longs, I'm pretty disappointed, and I think anytime you look at your portfolio and you ask yourself, why am I not making more money? Basically, it's usually what I found in my history as a professional and private investor is that it's almost always that you're not looking at enough stocks, and you're spending too much time looking at the same old stocks, or not enough time looking at new stocks. And you can see I never heard of this company. And it had a great clinical trial result. I'm not sure I believe the result, by the way, but it's tripled just in the last few weeks. And you could have bought it, interestingly, you kind of could have bought it after the results came out. Let's see if we can find it. Yeah, so you see the results. Oops, I messed up. You can see that the results came out. You obviously, if you wanted to buy it before, like here, you had to be super prescient and know the data was coming and know it was going to be good. But what's amazing is if you really quick on the trigger finger, and I know some people who are super good at this, they wake up early, they maybe drink more coffee than I do, and you can see the stock was 17 before the results come out, and already you can buy this. You don't have to pay, now it's 45. At 16, 17, you're obviously, you don't want to take the risk, roll the dice before the trial results, but after the trial results, you can see that you could have bought this thing for 29 or so dollars, and here you had the whole day to buy it at $30. And I knew about this. I didn't buy it. I didn't know about it here, but I could have bought it here. The results come out at midnight, so you often, or 6 a.m. So by the time it's 6 a.m., you read the results, you're ready, and by the time liquidity starts to form in the marketplace, it can be as early as 6:30, 7 a.m., and a lot of traders are still waking up, or they're still just trying to figure out the news that happened. So there's some people who are super quick on the trigger. They can buy in the 20s, and by the time it's 30 or so, they're more comfortable with it. And then of course, here it is in the 40s, and of course, so basically all I'm saying is laziness often prevents laziness, and mental lapses will get in the way of great returns. And if you ask yourself, why are my returns not high enough? Well, it's probably because you're not working hard enough. Here's another company that is super interesting. I probably would have been interested in buying this whole company, and it was just bought out the other day. Who knows? Maybe I'll compete and put in a bid of my own. But it looks like really good assets, and they're being bought for only $80 million. So you got two stocks that more than doubled this month. And I am disappointed in myself for not being, involved in them. I could have been, I should have been, but coulda, woulda, shoulda is 3 words that prevent you from success. And here's a whole list of more stocks that were up 30% in the year. And 30% is an enormous amount. If you can find just one stock every year that's up 20% in the month, I don't need to tell you what kind of return that is, but let me tell you anyway. Say 20%, right? For 12 months, you will make 800% returns. So $100,000 would become almost $1 million, right? Something like that. Just about $1 million. So if you were smart enough to somehow do that, nobody's that good. But it shows you that you don't need a stock to go up 8x. If a stock goes up, you might say, would you rather have one stock go up 8x over the course of the year? Well, there are not many that do that. But if you can find one that goes up 20% every month, I did it here. Here's Sangamo, but Sangamo wasn't the only stock I owned because I got to sort of diversify. So obviously it's very hard to get great returns, but sometimes you have to know that math to sort of think about investing. So Sangamo was up 24%. We'll talk about that in a second. Weibo is a social media company in China that I'm short. It was up 25%. I'm short a very little amount. Just so I learned the space a little bit more. But I noticed that stock did really well. So anyway, current opinions. I didn't add anything to this list, I don't think, but I actually do have a couple of additions. So let me just scan my list here, and I'll tell you just mentally some of the ones that I thought were really interesting. I started looking at this company, and I'm very, very early on it, but it's I looked at a couple. This one didn't excite me very much, called AImmune. Or Aimmune. That wasn't too exciting, but I looked at this one called Xenon. Did I look at Xenon? No. I looked at, the name might be very, very similar, I think. Let me take a look. It's roughly Xencor. There it is, Xencor. I thought Xencor looked really interesting. It started with an X. So Xencor seemed pretty cheap to me. That's the only one I'd say I found for the week that was super interesting. Yeah, I'd say that's it. I have some stuff that I'm looking at that I can't talk about, but that's one I'm willing to talk about. Oh, and I guess Taisho, which I'll talk about in a second. I bought some Taisho stock. And I no longer think Sihuan is overvalued. So we'll talk about that in a second. I'm also getting out of Neurotrope. Even though that's still overvalued, I'm going to get out of it. Okay, so here's the portfolio. I added a couple positions. I shorted Comcast. Again, I'm trying to spend more time in tech. I shorted Comcast because it's extremely expensive. I calculate, I think it's 26 times earnings. It's a no-growth business. In fact, I would argue that it's a shrinking business, given the internet cable is sort of being dismantled by Netflix and other technologies. So I'm pretty bearish on that. The content is obviously very valuable, but it's primarily still a cable company. And I bought some Taisho, which is a Japanese consumer products company, and I actually have some of their major product here called it's a Lipovitan, and I'm actually gonna do a taste test. I heard it's disgusting, but it's a really interesting stock. I really hope that it's not that disgusting. But anyway, let's go through the positions a little bit. Gilead has been doing well. I still like it. Just as the new HIV product sort of takes over and replaces the old HIV products. So we'll sort of see how Gilead does. And maybe Hep C will live a little bit longer than people think. Regeneron, lots of interesting assets here, but obviously like everyone else, I like it for Dupixent. And we'll kind of see what happens. Avexis is getting a lot of love, hit 52-week highs. Might make sense to start thinking about trimming it, but I also think they're going to get acquired. So we'll see if they get acquired by a bigger company. But it's a great fit for anyone who wants to be in rare diseases, which isn't so many folks. But anyway, the hemophilia companies are all doing fine. Spark is hitting new highs every day. So Sangamo's doing pretty well too. GSK, again, I have to think about whether I want to make this a 4 or 5% position. I think I do. Taisho is an $8 billion company, but they have $6 billion in cash, and you often find this in Japan. So you'll see that Japanese companies tend to hoard their cash. Ever since their crises, the managers there have learned to not borrow and hold their cash, and it's a really interesting company. Again, this is one of their major products. I'm going to do some due diligence here in a second. Let's see if it's an energy drink, basically. They sell medicine too. It's Taisho Pharmaceuticals. That's why I got to know the company. But it seems like it's just a basic energy drink. But I've heard it doesn't taste good. So I want to know if I should shake it or not. And it doesn't seem like I should shake it. But I don't know. Drink entire bottle. Delicious chilled. Okay. Oh. Well, anyway, let's see. PTC, all the other stocks are kind of as they were last week. But let's take a look. Ugh. All right, it's not that bad. So Japan's energy drink, folks. So there's my Comcast position. Let's see, Acadia, Bioverativ, Neurocrine, Insight, Medicines Company. Those are all my shorts. I mentioned I'm going to get out of Suhuan, and I'm probably going to get out of Neurotrope. So, and then maybe I'm going to grow Nectar and Ironwood. That's kind of my plan. But we're up 11.07%, 40 bips for the week, 45.10 gross net. With some forthcoming removals, my cats are having a big fight. With some forthcoming removals, I need to find some more investments. But I think I have some pretty good candidate positions here. Like this company should become a much bigger position. For instance, the GSK Royalty Co. And maybe something like GSK. So there's a couple of good positions. I think I've mentioned this company a few times. It's basically a company that collects a bunch of GSK's important products as a royalty, and I think it's super undervalued. So anyway, we'll kind of see how that goes. But all right, a bunch of news that I noticed for the week. Xarelto just came out with the Compass data. They had a 22 to 24% reduction in combination with aspirin, which was a pretty huge result. So Xarelto could add a couple billion, maybe 3 or 4 billion even in revenue there. The Axovant Alzheimer's data is coming out. This is I got to spend some time with my team on this. Axovant stock will either go from 19.5 to 80 or 5 if it fails. So you have to predict ahead of time whether or not the stock will go from 19 to 80 or 19 to 5, and it's going to happen in the next few weeks. So place your bets. It's like the Conor McGregor fight. You got to accept the stock market version. So that's going to be really exciting. Sangamo and Pfizer dosed the first hemophilia A patient. I sometimes joke, this when you're testing a drug for the first time, we call it first in human, FIH, first in human study. you watch that one patient really carefully. So this poor individual, poor guy, almost certainly a guy, who's hemophilia A, it's an X-linked disease. We're the Sangamo and Pfizer scientists will be watching that poor guy so carefully and so closely. I almost feel bad for him, but hopefully he'll be cured of his hemophilia. Sangamo's never done a human hemophilia experiment, and I know a lot of my friends have bought this stock at my suggestion, and I think that if the patient does well, we'll probably know pretty quickly. I mean, he's either going to get better or he's not. And the animals that they've tested get better rather quickly, so it'll be interesting to see if they do well or not. Sometimes you say buy the rumor, sell the news, and that's one thing that you might want to consider here. The Ilaris data from Novartis was pretty disappointing, so that was kind of interesting. Obviously, Novartis is a big company. It's not going to affect them too much, but it's certainly something that was pretty interesting. Neuralink is Elon Musk's mind-brain company. I actually know a little bit about this space, so I'm kind of curious. I'm going to be looking into that a little bit. Uber is going to appoint the Expedia CEO as their CEO. I think that's a really weak kind of hire. Expedia is a $22 billion company. I mean, I guess they've done pretty well. But the idea that this guy should be running a $50 billion, $60 billion company, I don't know. It's probably a good fit because it's sort of the same business in your booking reservations, but at the same time, I'm a little bit, it's not the most outside of the box choice. So hopefully he does well. We'll see. Who cares? I don't really care too much. Intracellular had some weird news. I always didn't like this company, so I'm looking to short this. Coherus caught a Temasek direct investment. Anyone who doesn't know Temasek, it's the Singapore Wealth Fund. They're a great group to get capital from, by the way. A lot of these Asian sovereign wealth funds are kind of easy to pitch if you ever need to go raise money, so go do your thing. Amantadine finally got approved. This drug's actually available, I think, in most of the rest of the world. So it's finally here. Could sell well, who knows? I should look at it. Stada is going private. I remember liking this stock many years ago. It's done rather well. They're a European generics company. Generics Armageddon is mostly confined to the U.S., which is why like Mylan will survive and maybe Teva will survive. But all the U.S. generic companies may not survive. Stada, I don't know if the rest of the world will catch generic fever in Armageddon as well. Aceto is one of the companies, for instance, that blew up. Western Digital is buying the much maligned Toshiba unit, which is pretty interesting. Big price tag there. And Ultragenyx had a clinical trial failure, which I thought was interesting because it makes the stock a little bit cheaper for, I think that failure was expected, and they have a bunch of other kind of interesting places. The Canadian drugs, I should say. The Canadian generics market is not very big, so I don't think it matters, and I think it's still a healthy market. With respect to industries, I focus on healthcare, and I'm trying to learn tech as well. I've kind of dabbled in tech for a long time, but that's sort of what I try to focus on those. So I get a lot of questions. KBT asked me if I ever play CSGO. The answer is no. I've played it. I don't like it. And why is Alibaba stock so volatile? They just reported earnings. You sound like a noob. So sorry, noob. DE asked if there'll ever be an interplanetary stock market. I would say yes. Maybe someday that'll happen, but that's still a stupid question. Aaron asked if he should trust raccoons with money. Aaron, I couldn't tell you, but this raccoon looks pretty legitimate, so I would say for that raccoon, sure. Johnny and Marty asked me about Bitcoin. I gave my opinion on Bitcoin a few weeks ago. I like it. I'm glad it's going up. Larry asked me about crowdfunding. I think crowdfunding is never going to be a real big opportunity. Think about it the same way politicians raise money. They mostly raise money from super PACs and billionaires. And most of the time when you need money for a company, you raise it from hedge funds and mutual funds and venture capital funds. The crowdfunding thing is interesting. I don't think it'll ever get a lot of traction. Richard asked maybe one smart question of the week. which is value investing risk aversion? I don't think so. I think value investing is buying risk for the appropriate reward and thinking about each unit of risk and each reward unit that comes with that risk unit. You can take a lot of risk for not a lot of reward, or you can take very little risk for a lot of reward. In fact, I think that's what I'm doing with this Taisho company in Japan. And I think if you haven't traded in a foreign market, you're not really a real investor, quite frankly. You should be able to look at opportunity no matter where it is. This stock Taisho is kind of on its butt. It's been kicked around, and I think it's trading at just a few times earnings, which is really a truly remarkable price. It's in Japan, sometimes I've traded Japan for a very long time, over 10 years, and one of the things about Japan is the market's not that efficient there, and you can often find these ridiculous opportunities, even in stocks like Nintendo, just by trading locally. And it doesn't cost a lot to open a brokerage account there if you don't have a brokerage account that can handle Japan. If not, get Interactive Brokers and you can handle Japanese stocks there. So I think that it's really important to trade these foreign markets and find lots of great opportunities in markets where it's less trafficked, right? Vishal asked me about Floyd Mayweather. I did not bet on it. My worst public company investment ever, Jack asks. I don't know how much time you have because I have a lot. Probably one of the most disappointing ones ever was in my early career. I really thought that I knew what I was doing, and I didn't. And I made a lot of mistakes. I bought one stock called Vanda, which didn't work out so well. I shorted a stock, the stock Amgen, at the wrong time. That didn't work out well. So I've made a lot of mistakes. I'm probably going to keep making mistakes. I've made mistakes recently too. But I keep learning from them, and eventually you run out of mistakes, I think, to learn from. So, someone anonymous asked me tips for dealing with depression without seeing a doctor. I think you have to see a doctor. I don't think you just have to suck it up and go to the physician, and you'll feel better by the time you leave the office. What determines market prices, Sheldon asks. Well, buyers and sellers and supply and demand, I'd say. Edward asked me about Protalix and Esperion. I bought Protalix on a friend's suggestion. I really have to dust it off. Esperion, I don't like any company that really focuses on mass market medicine, and Esperion is a cholesterol-lowering drug, so I'm really not a big fan of that one. Chris asked me how hard to borrow stocks work. So hard to borrow occurs when you're trying to short a stock, and it's very hard to borrow shares. You have to pay a high interest rate to borrow those shares. It's pretty complicated. It's a supply and demand market like any other. You can sort of focus on that yourself in your own time, but I think as you short, you'll learn more about how hard to borrows work. You might even get hurt in the process, but it's a worthy learning experience. Why does Buffett recommend indexing and you don't? Well, Buffett has never explained his position, and I think his basic position is that he thinks the U.S. will outperform the rest of the world for many generations to come, and I quite frankly don't think that he's making that bet in earnest, because he could just take $100 billion and buy stocks with it, and he's not doing that. I'm not sure, one, that he's following his own advice, and two, I think he's basically saying that U.S. stocks will go up over the long run. I don't think so. I don't think that he would say that all stocks will go up over the long run. He's just saying that U.S. stocks will go up over the long run, and the rest of the world stocks may or may not go up over the long run. So I think that's really it. Some fan art here. Thank you so much for the love. Got this, looks like some pencil drawing. Very nice. And this Puff Daddy Jay-Z thing here. Appreciate that. I'm reading some technical books on software. I'm really focused on my software company. Speaking of which, if you want to try out our software, you can go to godel.systems and sign up for a beta. Try to sign up with a LinkedIn account, or at least your school university account, so I know you're not some stranger. You can also text me or Facebook me if you really want an account. You can always send me an email. I know a lot of you have sent me emails, so I'm going to spend a little bit of time responding to emails and returning emails. I appreciate that. I am back on Twitter, but I'm not going to tell anybody what I'm doing. You'll see soon. And then, you know, I have a lot of stuff to talk about, but let me get back to a lot of those emails. I'm really trying to make a point to respond to everyone's emails. I haven't been so great at that. Thanks so much for joining, and I'll see you guys next week.